Bitcoin has once again sent shockwaves through the global financial landscape, leaving investors on edge as its price action challenges the very foundations of market sentiment and forces a critical reevaluation of where the cryptocurrency cycle stands today. In a market already grappling with lingering effects from last year's highs, the recent volatility has raised urgent questions about stability, potential capitulation, and the possibility of a massive reversal that could reshape portfolios overnight. Welcome to Crypto Hub, your trusted source for in-depth analysis of the digital asset space, where we cut through the noise to deliver clear, professional insights grounded in data and market realities. Today, we dive deep into the unfolding drama surrounding Bitcoin, examining whether the current shakeup signals the prelude to a significant turnaround, or if more turbulence lies ahead in what has become one of the most scrutinized periods in crypto history. The numbers paint a sobering picture for those who rode the wave of optimism following Bitcoin's remarkable ascent to over $126,000 in October of 2025. As we sit here in late May of 2026, Bitcoin hovers in the range of $75,000 to $77,000, representing a drawdown of approximately 40% from its all-time high and nearing the 50% mark when considering broader cycle peaks. This is not merely a minor correction. It is a profound shift that has wiped out substantial gains and triggered widespread liquidations across leveraged positions. Market participants have watched as what began as a post-halving consolidation evolved into a deeper corrective phase influenced by macroeconomic headwinds, geopolitical tensions, and shifting investor sentiment. The Fear and Greed Index has dipped into neutral to fearful territory, hovering around the 40s, reflecting a market that is cautious yet not entirely devoid of hope for recovery. On Crypto Hub, we believe in approaching such moments with measured professionalism, recognizing that Bitcoin's history is defined by cycles of exuberance and contraction, each offering lessons for the discerning investor. To understand the current shakeup, it is essential to trace the trajectory leading into this phase. Bitcoin's surge in late 2025 was fueled by a combination of institutional adoption, favorable regulatory developments in key jurisdictions, and a broader risk-on environment that saw capital flowing into high-growth assets. Exchange-traded funds played a pivotal role, with billions in inflows signaling mainstream acceptance. Yet, as 2026 unfolded, cracks began to appear. A series of surprise events, including escalating geopolitical conflicts in the Middle East that drove oil prices higher and reignited inflation concerns, created a risk-off atmosphere. Central banks, wary of premature rate cuts, maintained a tighter stance, which weighed on liquidity-sensitive assets like cryptocurrencies. Bitcoin felt the brunt of this, experiencing sharp sell-offs, including one of its largest single-day drops since late 2022, as correlated assets in technology and equities also faltered. This interconnectedness highlights Bitcoin's evolution from an isolated digital experiment to a mature asset class intertwined with traditional markets, a development that amplifies both its upside potential and downside risks. Delving into the technical landscape reveals layers of complexity that traders and analysts are closely monitoring. On the daily and weekly charts, Bitcoin has been navigating a prolonged trading range after breaking below key support levels established during the previous bull run. The 50% drawdown from cycle highs has left a trail of trapped bulls near the all-time highs, creating overhead resistance that could cap near-term rallies. However, there are glimmers of potential reversal signals. For instance, the asset has shown resilience around the $70,000 psychological level, bouncing multiple times despite intense selling pressure. Moving averages present a mixed picture, with the 200-day exponential moving average around the $82,000 zone acting as a formidable barrier. A decisive close above this could confirm a shift in momentum, potentially targeting $85,000 or higher in a relief rally. Conversely, failure to hold above 70,000 might open the door to deeper corrections towards 60,000 or even lower, aligning with some cycle-based projections that suggest the bear market may extend into later 2026. On-chain metrics add another dimension to this analysis. Realized prices and cost basis levels for short-term holders indicate that many recent buyers are underwater, which often precedes capitulation events that historically mark cycle bottoms. Funding rates in perpetual futures have moderated to neutral territory, reducing the risk of cascading liquidations, but also signaling a lack of aggressive bullish conviction. Options positioning shows increasing support for upside moves, with implied volatility, suggesting traders are preparing for potential breakouts rather than prolonged stagnation. Yet the broader picture remains one of caution. Bitcoin's correlation with technology stocks and its sensitivity to the US dollar index mean that any resurgence in risk appetite could provide the catalyst needed for reversal, while persistent strength in the dollar or delays in monetary easing could prolong the pain. At Crypto Hub, we emphasize the importance of these indicators not as crystal balls, but as tools for informed decision-making in an inherently uncertain environment. Macroeconomic factors continue to exert significant influence over Bitcoin's path. With global liquidity conditions in flux, the interplay between interest rates, inflation data, and fiscal policies cannot be overstated. In the United States, for example, debates around debt ceilings and stimulus measures have created uncertainty that ripples into crypto markets. Geopolitical developments, such as tensions affecting energy corridors, have driven safe haven flows into gold and the dollar, temporarily sidelining Bitcoin despite its long-term narrative as digital gold. Institutional players, however, appear to be accumulating during dips, as evidenced by steady inflows into spot Bitcoin ETFs, even amid the volatility. This divergence between retail sentiment and professional positioning is a classic hallmark of market cycles, often preceding major reversals. Analysts point to historical precedents where similar drawdowns, though painful, laid the groundwork for explosive recoveries once external pressures eased. Whether 2026 follows this pattern depends largely on how policymakers navigate the current economic crossroads. Expert opinions vary widely, reflecting the polarized nature of crypto forecasting. Some seasoned voices, drawing from cycle analysis, argue that the current phase aligns with extended bear market timelines, potentially bottoming near October of 2026 before a new bull leg emerges. Others see the recent stabilization around 75,000 as evidence that the worst may be behind us, citing improving on-chain health and reduced leverage as foundations for upside. Contrarian perspectives highlight the potential for a bear trap, where further downside lures in sellers only for a sharp reversal to catch them off guard. On Crypto Hub, we synthesize these views without bias, presenting them as part of a comprehensive framework that encourages viewers to conduct their own due diligence. What remains clear is that Bitcoin's volatility is not diminishing. If anything, its maturation has introduced new layers of complexity, driven by larger capital flows and regulatory scrutiny. Looking ahead, the question of a massive reversal hinges on several potential catalysts. A breakthrough in geopolitical stability could restore risk appetite, propelling Bitcoin toward the 80,000 to 90,000 range in the coming months. Technological advancements within the Bitcoin ecosystem, such as improvements in Layer 2 solutions or increased adoption in payments and remittances, could bolster its fundamental value proposition. Regulatory clarity, particularly in major economies, might unlock additional institutional capital that has been sitting on the sidelines. Conversely, persistent inflation or unexpected economic slowdowns could trigger another leg down, testing lower supports and forcing a reevaluation of long-term holdings. Investors must weigh these scenarios carefully, balancing the asset's scarcity narrative with its halving-driven supply dynamics against immediate market pressures. The current environment demands patience and strategic positioning rather than impulsive reactions. Bitcoin's role in the broader financial system has evolved dramatically since its inception. Once dismissed as a fringe curiosity, it now commands a market capitalization in the trillions and influences everything from corporate treasuries to sovereign reserve strategies. This prominence amplifies the impact of its price movements, as seen in the recent market-wide shakeup that affected altcoins, equities, and even traditional commodities. Ethereum, for instance, has faced similar pressures but with added dynamics from its own upgrade roadmap and staking yields. Smaller tokens have suffered more acutely, underscoring Bitcoin's dominance as the bellwether for the entire crypto sector. At times like these, diversification within the asset class becomes crucial, though many argue that Bitcoin remains the core holding due to its proven resilience and network effects. Professional market updates like this one from CryptoHub aim to equip viewers with the context needed to navigate such interdependencies effectively. Historical cycle comparisons provide valuable perspective without guaranteeing future outcomes. Previous bear markets, including the one following the 2021 peak, featured drawdowns exceeding 70% and durations spanning over a year. The current episode, while severe at around 40 to 50%, has unfolded against a backdrop of higher institutional involvement and more sophisticated market infrastructure. This could mean a shallower but more prolonged consolidation phase. Volume profiles showed diminishing selling intensity in recent weeks, a potential sign of exhaustion among bears. RSI indicators on higher timeframes are approaching oversold levels not seen since major capitulation events of the past, which have often coincided with generational buying opportunities. Yet, as always, external shocks remain the wild card. The interplay of these elements creates a narrative that is both cautionary and optimistic, reminding us that markets reward those who endure with disciplined analysis. Community sentiment and social media discourse further illuminate the current mood. Discussions range from outright despair among newer entrants to steadfast conviction from long-term holders who view dips as accumulation phases. Influential analysts debate the validity of traditional cycle models in light of Bitcoin's growing correlation with macro factors. Some warn of an extended crypto winter, while others point to accumulating evidence of a bottoming process. On platforms where retail participation is high, the fear and greed dynamics often lead to emotional trading, amplifying volatility. CryptoHub encourages a more detached professional approach, focusing on verifiable data over hype. Education remains key in empowering investors to separate signal from noise in an environment saturated with opinions. Fundamentals underpinning Bitcoin continue to strengthen despite price action. The fixed supply cap of 21 million coins, combined with periodic halvings that reduce new issuance, creates a deflationary pressure that gains relevance as adoption grows. Corporate balance sheets increasingly feature Bitcoin as a treasury asset, providing a buffer against fiat depreciation. Nation-state interest, though uneven, adds another layer of legitimacy. These elements suggest that any reversal, when it materializes, could be fueled by a confluence of improving liquidity and renewed narrative momentum. In the interim, volatility will likely persist, with swings capable of shaking even the most seasoned participants. Monitoring key levels such as 70,000 support and 85,000 resistance will be critical for short to medium-term trading decisions. Risk management strategies take center stage in discussions of potential reversals. Position sizing, stop losses, and dollar cost averaging emerge as essential tools for mitigating the impact of sudden moves. For those considering entry or re-entry, waiting for confirmation of trend reversal through higher highs and higher lows is advisable. Diversification into stable assets or traditional hedges can provide balance during uncertain periods. At the same time, overlooking Bitcoin's asymmetric upside in a successful reversal scenario could mean missing substantial gains. The professional lens through which we view these markets at CryptoHub underscores the need for balanced portfolios aligned with individual risk tolerance and time horizons. No single event defines the outcome. Rather, it is the cumulative effect of multiple factors converging over time. As we synthesize the available information, the possibility of a massive crypto reversal remains plausible but not imminent. Bitcoin has shaken the market profoundly, exposing weaknesses in over-leveraged structures and testing investor resolve. Yet the seeds of recovery are visible in resilient support levels, institutional interest, and long-term fundamentals. The coming weeks and months will be telling as economic data releases, policy decisions, and on-chain developments unfold. Viewers are reminded that past performance does not predict future results, and all investments carry inherent risks. Staying informed through reliable sources like CryptoHub can help in making prudent choices amid the uncertainty. The crypto space, for all its volatility, continues to mature, offering opportunities for those prepared to engage thoughtfully with its dynamics. In conclusion, while Bitcoin's recent performance has been challenging, it also presents a moment for reflection and strategic positioning. The market's shakeup may indeed foreshadow a reversal, but timing and confirmation are everything. Thank you for joining us on Crypto Hub, where we remain committed to delivering serious professional analysis of the cryptocurrency world. Stay vigilant, invest wisely, and we look forward to updating you on the next chapter of this evolving story. Subscribe and enable notifications so you never miss an update from Crypto Hub.